Hello, welcome to my channel today. This is a King's Tutor. It's the first time of joining us. Ensure you like, comment, share, and subscribe to this channel. Okay, now today we want to see a question on departmental account. We have seen various videos on that before now, but if you have not seen that, especially from the introduction aspect, I will drop it in the description below, and I also drop it up so you check other questions. Okay, now this question said Abike is the proprietress of a shop which operates two departments A and B. The following balances were presented for the period ended 31st March 2008. Sales, department A 150,000, department B 100,000. We have stock on the 1st of April 2007, Department A 25, Department B 2000. Purchases, Department A 118,000, Department B 82,000. Wages of sales assistant, Department A 10,000 and Department B 75. Sales commission, Department A 15. Then office salaries, we have 75. Rates 1,300. Insurance 500. Electricity 1,200. Repairs to premises 250. Telephone charges 250. Cleaning 300. Accountancy fees 1,200. Office expenses 600. Stock on the 31st of March 2008, Department A 3,000, Department B 15. Additional information. 1. The portion of total floor area occupied by each department was Department A 1/5, Department B 4/5. I said apportionment overhead is to be made as follows: area, rates, insurance, electricity, repairs, telephone, and cleaning. Then turnover, office salary, accountancy fees, and office expenses. And they said you are required to prepare the departmental trading profit and loss account for the year ended 31st March 2008. And they said, note, the total columns are not required. So in this situation now, what do we do? Now, we have to ensure that we treat the apportionment first, okay? Because the departmental accounts we require that every item will be put into what their different departments column, okay? And there are some expenses here that have not been apportioned due to the fact that they are not directly caused by a particular department, okay? So they gave us a criteria whereby we can apportion it. Okay, they said the first one, the portion of total floor area occupied by each department was this, Department A and B. Now they're not giving us a yardstick for apportionment. They said apportionment of our head is to be made as follows: for area, which is this that was given, use rate, insurance, electricity, repairs, telephone, and cleaning. You do all this as regards area. Then turnover is something as our sales. Okay, so sales is already given in different departments. So we're going to use office salary, accountancy fees, and office expenses. And we'll do that as regards the sales. Okay. So the first thing we are going to do here is to prepare the apportionment. Very important. Okay. So we will prepare our apportionment. Okay. So the first one, I said for the area, we're going to start with the area. We're going to start with the area, with its rates, insurance, electricity, repairs, telephone. So the area, let's get the portion that was given. So we said department A 1/5 and department B 4/5. So we're going to put it there as area. Department A is 1/5 and department B is 4/5. Okay, so the first one is rates. Okay, so we're going to look for rates here. Rate is 1,300. So we have rates. So for department A now, it is 1/5 times 1,300 over 1. Okay, so it should be equal to 1/5 times 1,300 over 1 to give us 260 using our calculator. Now department B will now be equal to 4/5 times the total 1,300 over 1, and using my calculator this will give me 1,040. Okay, so anytime you've divided it for departments, when you add it together, it's supposed to give you the totality of that rate, that expenses, that actual expenses. Okay, so that's the first one, rates. The second one is insurance. Okay, now let's check how much is insurance here. 500. Okay, so we'll come here, I'll put insurance department A is 1/5 times the total of insurance is 500. So 1/5 times 500 over 1. Okay, so if we do that, we'll have 100. Okay, while for department B, we'll have 4/5 times 500 over 1. So 4/5 times 500 over 1 will give us 400. Okay, so that's for insurance. And the next one is electricity. Okay, now electricity here is 1,200. So we'll have electricity, which will give us for department A is 1/5 times the amount for electricity is 240. So we have 240 over 1. Okay, so 1/4 times 240, 1/5 times 240 will give us, so this is 1 2, electricity is 1 2. Okay, electricity is 1 2. So 1/5 times 1 2 will give us, using our calculator, will give us 240. While for department B, it will be 4/5 times 1 2 over 1, and this will give us 960. Okay, so that is for electricity. Now the next one is repairs, and the total for repairs is 250. So we'll have repairs for department A. Department A is 1/5 times 250 over 1. Okay, so using our calculator, it will be 1/5 times 250 will give us 50. While department B, it is 4/5 times 250 over 1. So 4/5 times 250 will give us 200. Okay, so that's for repairs. And the next one is telephone, and the telephone total is also 250. So we'll have telephone, we have department A, 1/5 times 250 over 1. Okay, so 1/5 times 250 over 1 will give us 50. And also department B will be 4/5 times 250 over 1. And 4/5 times 250 over 1 will give us 200. Okay, so that's for telephone. The next one, and cleaning, that will be the last for area. Okay, so and cleaning, so cleaning here is what, 300 total. So we now have cleaning, department A is 1/5 times 300 over 1. Okay, so if we use our calculator, 1/5 times 300 will give us 60. Okay, while for department B, it it will be 4 over 5 times 300 over 1. So 4 over 5 times 300 over 1 will give us 240. Okay, to give us 240. So we'll have, that is all for the apportionment as regards the area. So we'll now check others as regards turnover. Okay, so but before that, let's get the ratio we are going to use for the turnover. So the same way we have that of area. Okay, so having our turnover, for turnover we'll have, turnover is simply as our sales. For sales for department A is 150,000, department B is 100,000. So it will be turnover department A is 150,000 and department B is 250,000. So we'll add it together, we'll be having, so department B is 100,000. So this is 100,000. Okay, so if you add it together, it will be 250,000. Okay, so that is 150,000 for department A, department B is 100 times over equals to 250,000. Okay, so from this now let's now get the apportionment. The first one is office salary. Okay, first one is office salary. So office salary, the total here is 75. So we'll have office salary. So department A now will be this 150. That's 150,000 divided by the total 250,000 times the amount for that office salary, which is 75. That is 75 over 1. Okay, while department B will be 100,000 divided by the total 250,000 times 75 over 1. Okay, so from this now, 150,000 over 250 times 75 will give us 4,500, and 100,000 divided by this times 75 will give us 3,000. So that's for office salary. The next one will be accountancy fees. Okay, and the total for accountancy fees there is 1,200. So we'll have department accountancy fees. Accountancy fees. Department A. Department A is 150,000 divided by 250,000 times the total of accountancy fees is 1,200 over 1. And also for department B, it is 100,000 divided by 250,000 times 1,200 over 1. Okay, so for the accountancy fees, we're having for department A is 720, and department B it is 480. Okay, so why the last one will be for office expenses. Office expenses there is 600. So we'll have office expenses. So for department A, it is 150,000 divided by 250,000 times 600 over 1. While department B, it is 100,000 divided by 250,000 times 600 over 1. Okay, so from here now we'll have, so 150,000 over 250 times 600 will give us 360. Why 100,000 divided by 250 will give us 240. Okay, so that is the apportionment. Okay, so those are for the expenses that do not have as regards department. So we have done all of it. Okay, so in exam condition, you just check in 1 minute if you have virtually done all the expenses. So for rates, we have done for rates, insurance, we've done electricity, repairs, telephone charges, cleaning. Okay, now office salaries, accountancy fees, office expenses. So it is now left for us to post accordingly. Okay, so for us to post accordingly, so we are going to prepare, we've done that already, departmental trading profit or loss account for the ended. Okay, now if you've not seen this format, we've done a video on that. Please check in the description or ask me, the King's Tutor, how do I get this, in the comment section, and I will show it to you. Okay, so let's now start posting. So departmental trading profit or loss account still looks like the normal trading profit and loss account. So the first item that always starts it is the opening stock. Okay, but before that, let's fill in this. These are particulars. This department A, this department B. These are particulars. This department A, this department B. Okay, so the first one we said is the opening stock. So we'll have the opening stock here. Okay, so the opening stock here, you see it is here. The opening stock for department A is 25, department B is 2000. So come here, write 25, write 2000. Okay, the next thing is to add purchases. So purchases, department A is 118,000 and department B is 82,000. Okay, so if we add up 25 plus 118,000 will give us 120,500, and 2,000 plus 82,000 will give us 84,000. So the next one, we'll check if there is carriage inward, return outward. If there is not, now let's suppose at the right hand side we have our sales here. Okay, and let's suppose the sales at the credit side here. So we have sales. Department A is 150,000, department B is 100,000. So we have 150,000 and department B is 100,000. Okay, so the next one we have, so less closing stock. So we have less closing stock. So we have less closing stock. Closing stock is the one at the end, 3,000, department B 15. So we have 3,000 and 15. Okay, so if we less it, 120,500 minus 3,000 will give us 117,500, and this minus this will give us 82,500. Okay, so and this now, this becomes our cost of goods sold. Okay, so from here now, our sales minus cost of goods sold will give us what we call the gross profit, and this will be carried down. So it is now 150,000 minus 117,500. That will give us 32,500. And 100,000 minus 82,500 will give us 17,500. Okay, so if we add up this now, it now gives us 150,000. So I have 150,000, and this will give us 100,000. So this 150,000, this 100,000. Okay. So the gross profit carried down is not brought down on this side. So we have the gross profit brought down. So gross profit brought down here as 32,500, and here as 17,500. Okay. So we can now start posting all our expenses here. Okay. So from this now let's start from up here. Sales is not an expensive. Stock, purchases now. Wages of sales assistant, department A and department B. So we can put it here. Wages of sales assistant. Department A is 10,000, department B 75. Department A 10,000, department B 75. Okay. Now come here. Sales commission, department A 15. Sales commission, department A is 15. Department B have nothing. Okay. We'll come here. Office salary. Office salary. We've done all the expenses, the apportionment. So now let's start with what we have here as regards the apportionment we did. Okay. For rates, let's put it there. Now for rates, department A is 260. Department B is 1,040. The next one, insurance. Insurance. Department A is 100. Department B is 400. So right, 100 and 400. The next one, electricity. Department A 240. Department B 960. So have electricity. Department A 240. Department B 960. The next one, repairs. Department A 50. Department B 200. Repairs. Department A 50. Department B 200. Telephone. So have telephone. Department A 50. Department B 200. Okay. The next one, cleaning. Department A 60. Department B 240. So have cleaning. Department A is 60. Department B is 240. The next one, office salary. Department A 45. Department B 3,000. So we have office salaries. Department A is 45 and department B is 3,000. So we have the next one, accountancy fees. Department A 720, department B 480. So we have accountancy fees. Department A 720, department B 480. The next one, office expenses. Department A 360, department B 240. The next one, office expenses. Department A 360. Department B 240. That's all for the expenses. Okay, so let's check if there's any item here. That's what you do to check so you don't miss any item. So we have office salary, rates, insurance, electricity, repairs, telephone, cleaning, accountancy fees, office expenses, they've all been recorded here. Now let's get our net profit, okay, or net loss. So we're going to add okay, so we're going to add up this part. So if we add up 10,000 plus 15 plus 260 plus 100 plus 240 plus 50 plus 50 plus 60 plus 45 plus 720 plus 360 equals to 17,840. So it is less than this. Okay, it means there's a net profit here for department A. Okay, so it means 32,500 minus 17,840, which is the expenses for the side, will give us 14,660. Okay, so when you add it together, it gives 32,500. Okay, so the next one we have 75 plus 1,040 plus 400 plus 960 plus 200 plus 200 plus 240 plus 3,000 plus 480 and plus 240 is 14,260. So deduct it from 75. It will give us 3,240. So when we add together, this will give us 17,500, and this will give us 32,500 and 17,500. Okay, so that's how to prepare our departmental trading profit or loss account. Okay, so ensure you like, comment, share, subscribe to this channel for more of this. And I'm recommending this video for you to watch from the scratch, departmental account. You see this video showing now, ensure you watch it now. And if you have any question, please ensure you ask in the comment section below, and I'll get it for you. Thank you very much.